Chemicals and furniture, just a couple of industries represented in this edition of Zacks Rank Buys Growth and Income Stock Picks. Todd Bunton, our growth and income stock strategist, with me once again to kind of talk about two companies that you've identified, one in each of these categories. We'll start with chemicals. Familiar name, Dow Chemical. Yep, Dow. DOW is the ticker symbol. One of the largest chemical companies in the world. Founded in 1897, been around a while. Yeah. But they sell more than 5,000 products to a variety of different end markets. When you say chemicals, they're pretty diverse. Yeah, very diverse. I mean, some of their end markets are automotive, agricultural, construction, packaging. Right. And they're diverse geographically. About 2/3 of their sales come from overseas. And it was actually that overseas growth that helped them in the last quarter, in China specifically. The company delivered a very solid earnings beat on April 23rd. And even though total sales growth was pretty much flat, the company was able to expand its profit margins based not solely on, but a focus on cost cutting and efficiency. So that led to a very solid earnings beat. And that flowed through into the estimates. And if you take a look at analysts, they've revised their estimates pretty significantly higher for both 2014 and 2015. And if you take a look at the agreement and magnitude of consensus estimates, they're both moving in the right direction. So analysts almost unanimously raised their estimates after the beat, and the magnitude of those raises were pretty significant, enough to send it to a Zacks rank of 2, which is a buy rating. 3% dividend? 3% dividend, you can't go wrong there. Wow. They did cut that during the Great Recession, but because you can think they're a chemical company, they're obviously pretty economically tied to the global economy. So, sure. They did cut that during the Great Recession, but since 2011 they've been increasing it. And as long as they can continue to grow earnings, which based on current consensus estimates, analysts expect 18% growth from this company this year and 17% growth next year, I'd expect that dividend to continue to increase. And again, that's predicated on kind of a growing global economy. Most people are expecting just slow growth in 2014, but as you can see, they're able to turn pretty flat top-line growth into solid bottom line growth because of that focus on efficiency. So you've got the growth, you've got the income here, and all at a pretty reasonable price. They trade about 16 times forward earnings. That's in line with the industry median. And based on the good growth and income metrics here, I'd say there could be solid total return potential in this name over the next 6 to 12 months. All right. And the furniture manufacturer, now this is the second largest office furniture manufacturer in the world, you say? Yes. HNI Corp. HNI, yeah, and they're focused primarily on office furniture, like I said. That's about 80% of the revenues. They also have a segment called Hearth, which is gas and wood burning fireplaces, and that's about 20%. And that was actually the big growth driver in the last quarter. So the company reported first quarter results on April 16th, and it was that strength in the Hearth business that drove earnings significantly higher. So if you look, analysts have revised their estimates significantly higher for both 2014 and 2015 off of that beat. Part of that was predicated on the fact that management raised its guidance for the year. So a lot of good stuff going on here, and not only from an earnings momentum perspective, but growth perspective. Analysts expect about 26% earnings growth from this company this year and 22% next year. Wow. So good little grower. They're a small capper. You don't usually see solid income from small caps, but that's what you get here. They pay a dividend that yields 2.7%. Yeah, I see that. And if you take a look since 2000, you can see nice steady increases and about a 6% compound annual growth rate. And they did not cut their dividend during the Great Recession, so they held that steady. And as long as they can continue to grow that bottom line like they're expected to, I would expect that dividend to continue increasing into the future. So you've got good income to go along with the solid growth, all at a pretty reasonable price. They trade about 18 times forward earnings. Historically, they've been about 19 times, so it is a slight discount to that. Given the growth, given the income and the earnings momentum, I'd say that's pretty reasonably priced. Another attractive total return play over the next 6 to 12 months here. Okay, do you own either one? I do not. All right, check out other stock picks on our website, Zacks.com. Put there for you on a daily basis. In other words, they change daily. So you may want to check back often just to keep up with some of the changes. If you're not there already watching this video, then get on over to Zacks.com. You can link to them all right off the home page. With Todd, I'm Terry Ruffalo.